the biggest lesson I learned, I guess, over the last 10 years in just working on side projects or side hustles, which ultimately led to real companies that were built from them.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
Hello and welcome to the Gentle Art of Crushing It. I am your podcast host, Sean Graham, and with me today I have self-storage investor and partner of mine, Mathew Bradberry. Matt, welcome to the show.
Hey, thanks. I'm looking forward to kicking this off.
Yeah, man, you are my first podcast interview here as I'm co-hosting the show with other people, and so my focus and expertise with my company is Maven Equities, and we focus on self-storage. So, you and I, we are partners in a self-storage facility together that we both own and invest in. So I wanted to talk about that, but I guess before we get into all that, maybe you could just kind of give a little bit of your background. And from what I know, you went to UCF, you majored in IT or computer programming, and you're an entrepreneur, correct?
Yeah. So I started out as a pretty standard computer science program in high school track, and I kind of got deeper into that lifestyle through school and hanging out in the computer labs, and that kind of shaped the friends I made early on and kind of the ambitions I was aspiring to later in life. And starting from there, after school, I studied computer science, kind of went where all of the other, the gold rush to the tech sector, moving out to Silicon Valley right after school with some friends, and following the allure of being like a hacker in like the biggest tech hub in the world. And so I moved out to San Francisco, lived there for quite a while, and did the pretty standard path of bouncing around Silicon Valley tech companies for every couple of years for a while. And that was super fun, and it allowed me to get a good perspective on how different businesses were run, and it allowed me to make a lot of connections with people both inside and outside of technology, but people who I think really just prioritize building in general, like more so than any other place I've ever lived, like San Francisco, and then I also lived later in Seattle. People were really a lot more focused on designing their lives around like producing something or building something, and that was almost a source of pride for a lot of people. And so that kind of shaped my worldview too, and that kind of went hand in hand with being a developer, because you're really empowered to like be able to leverage code to be able to actually impact a lot of people with a very small number of teams. And so that kind of shifted my path over time to more trying to build things. I started out on nights and weekends trying to sort of build things I was excited about and tinker on projects I was excited about, while I was still trying to maintain enough focus and energy to be productive in the day jobs. But that kind of like marked that shift away from working the standard 9-to-5 W-2 jobs. And even though I did kind of like that, and I learned a ton, and I met a lot of people through that, there's definitely a trend where I was always kind of unsatisfied with living that kind of lifestyle, and I was always kind of trying to escape that with my free time and being able to create. And also, it was just a lot of fun to be able to like hack on things and build things with my friends. So the combination of those two things really started to lead me more towards like this indie hacker style life, and trying to build equity in something as opposed to just renting your time to a company for a paycheck. So that kind of marked that shift, and that's kind of ultimately where I ended up as of a few years ago. And that's been a fun adventure, and it's we can go into a little more depth than that later, but that's a pretty broad overview of kind of my path and the shift away from the traditional lifestyle of working to like trying to do things on your own and trying to build equity in a lot of different revenue streams and stuff. So and that's kind of like part of how we ended up meeting too, was like I when we started talking about doing a deal together, it kind of fit into that theme of, just building equity and building income streams across the board. So that kind of fit in well with that strategy, I think.
Right, for sure. So overall, you were working for some big tech companies out in Silicon Valley, and then you gradually started to build things out on your own. And then I guess, what did that transition look like, right? From actually saying, all right, I'm done with for working for the big tech companies, I'm fully going out on my own. And what did you go do? Because that's a big leap of faith, and I don't know if it was your choice or not your choice to leave, but it's a big leap of faith. And then you're giving up a lot of income, like good income, right? Like if you're working for those companies, they're paying you well. So I have a ton of respect for that, right? Because as an entrepreneur, I've gone out on my own as well. But walk us through that transition.
Yeah, it's a big risk, and I would say I'm probably towards the middle of the spectrum on risk tolerance, maybe even a little more conservative. But it really wasn't like a singular event where I like made that switch. But I was always kind of a hacker as far as like not necessarily like always coding, but like I was always trying to like build stuff on the side, whether that was like I tried Amazon FBA for a while. I tried a couple software companies like on the side for a while. So I was always kind of building things. And so it was kind of a natural path where I was, I guess the transition, it was not like one big decision one day where I just got over it and I just left my companies. Like you are giving up a lot when you leave that, right? You're giving up, your health insurance, you're giving up, your stock options, you're giving up, the security of the W-2 job, and there's also like this stigma of if things fail, like will my skill set still be relevant? All those things you're really taking on risk when you leave. But one way to, I guess, mitigate a lot of that risk was like we really didn't meet. And when I say we, so I have a pretty consistent core group of friends who worked on these projects across different domains, and eventually over time. We spent a couple of years building in the same space consistently, and that space was, in my particular case, we were building online games for several years, and eventually we can get a little bit more into this later, but the fact that we like consistently stayed in a single domain and we stopped hopping around as much, and we really started to compound our knowledge base in one specific area, that's when things really started to shift. As opposed to like before, especially early in my 20s, right out of school, when we would build things, we would hop around at like the new shiny object, and we would just kind of build wherever was fun. And then when like the novelty wore off, then we would kind of flip flop around. But it really wasn't until we kind of remained focused and disciplined and patient with building up knowledge in a certain area, and then actually leveraging previous work from previous like quote failures to actually take advantage of that. It wasn't really until then that things started to pick up and we actually started to produce revenue in some of these projects. And then once we actually had established revenue and we were able to grow it consistently over time, it wasn't until then that we actually had the discussion on whether or not to leave our secured position and actually try to grow this thing. It wasn't really until the revenue from those projects was exceeding all of our salaries. So it wasn't some obvious thing to do, and it wasn't. It sounds more courageous than it really was at the time. Like we actually probably should have left earlier than we did. But, it was a pretty long transition, and things were kind of trending that way. But it wasn't really until we kind of figured out, how we wanted to approach like sticking with certain projects that we were able to actually make that transition.
Right. So I think what you said there about focusing on one specific area or expertise is huge, right? So within real estate, Brandon Turner he talks about this a lot. You're trying to reach financial freedom. Financial freedom is this island, and how do you get to the island? You have to build a bridge across to that island, right? Mm-hmm. And so you get shiny object syndrome. A lot of entrepreneurs do, and you start building bridges halfway out, and they're all like partially built. Mm-hmm. And there's a lot to be said to just focus on one area and getting that bridge completely built and across the water to financial freedom, right? So a lot of parallels there.
Yeah, I think it's something that I think a lot of people, once they achieve some level of whether you want to call it success, or they see positive results in whatever they're working on, they start to realize that progress is not like linear growth. So you're not going to, in a lot of almost every case, you're not going to see immediate success. You're not even going to see success proportional to like your investment early on. These things are typically exponential, and so if you ever look like at the yield of like a compound growth curve, like both in finances, but that also applies to everything, whether that's habits or discipline and any other area of your life. Like these investments, you don't see the results early on, and so that goes back to your, I guess Brandon Turner's analogy of the building the bridges to this island. It's like you're not going to just be able to go out every day and put a plank down and see linear progress every day. You're actually, you'll be putting those planks down, and it'll be barely visible progress for a long time. And if you stick with the process, eventually you'll start seeing like many planks go down in an exponential fashion, as opposed to like just seeing like a linear. So I think that could be discouraging for people in a lot of ways. But until you can make the shift to realize, to really see like the nature of success and you start to notice these patterns in successful projects that you do, that the nature of success is nonlinear. The nature of success is not really consistent, but the outcomes aren't consistent. But if you can be consistent in your approach and disciplined in the process, then that's when you really start to see these results. So I do like that metaphor, but it's definitely worth pointing out that like people shouldn't get discouraged if they're trying to, lay the foundation for that and they're not seeing immediate results. And that's why it's so important to kind of focus on one particular project or goal, or as opposed to hopping around, because like, and especially I suffered from this early on, was like when you're in those dips, when you're in those valleys where you're not seeing proportional success to your investment, that's like when you really need to buckle down and rely on the process, as opposed to like looking up and not seeing enough and being discouraged, and then hopping around and seeing if you could find some easier success somewhere else. So I definitely relate to that. I definitely think that's super useful. And unfortunately, like for me, even though I kind of heard that principle before, it wasn't really until I tried to like force myself to experience that I really learned those lessons.
Right. Yep. Completely understand. For me, that was eventually, right, like from the real estate perspective, it was eventually just picking a path within real estate. I knew I wanted to go into commercial real estate, move from residential into commercial. And you start listening to all these podcasts, you start reading these books, and it's just, there's so many ways to make money. And same thing like in the tech world, right? Like you can pick any path and you'll find people who are making money and successful at it. Mm-hmm. And so it's more just like, all right, where are you going to buckle down, actually put your time and resources and energy into and make it a success? And really it's whatever speaks to you, like what do you love? Like what are you passionate about? And what's fun, what's not a burden. And for me, it was self-storage. And for you, it sounds like it was within the gaming industry of, explain this a little bit more, but you were essentially making products for video games. Is that correct? Like within in the game?
Yeah, essentially. But to kind of touch on your point, I think that's such a good like lesson for a lot of people to take, is that like there are many, and this applies to real estate as well as really anything else you're trying to build in. There are a lot of ways to make money. There are a lot of options that you could be successful at, and then a lot of people get stuck in this analysis paralysis, right? Like, what should I do this? And they try to find like the thing that's maybe 5% more optimal, and they're running all this analysis and they're modeling everything. But really, honestly, at the end of the day, with anything, it's really just about picking one that, and it could be arbitrary, but nobody really works that way as far as flipping a coin and doing it. It's really about picking the one that you're most likely to be consistent with, the one that you said, like when you switched from residential to commercial, like that was the one that was like the least burden to you. That was the one that you were most likely to show up to every day and make progress on, right? Yep. So I think that's such a good point. As far as what we did, it was sort of similar. Like there was a lot of things to work on, but and a lot of failures and a lot of projects that didn't end up actually pushing past that dip phase of projects. But similar to what you said, as far as making that transition into something you were more, I guess, willing to stick with, it was for us, it was about tinkering enough until we found something that we had enough joy in the process of doing that we were super likely to show up consistently and to produce results consistently and to stick with the process consistently. And I think you can do that for things that you're not necessarily super passionate about. I do think that's possible. You can set up systems and routines and habits to get you to the end goal, to just get you to show up every day. But it is easier if you can land on something that you do. If it's not get super excited about, at least it's something that you don't despise doing, right? It definitely makes it there's a lot less friction there when you find that. So that definitely does apply to real estate as well. But so I guess when you made that transition from residential, like, how did you know that you wanted to make that transition? Like you said, you started out in residential and you ended up shifting. Was there something in particular that was like just super unsatisfactory about being in residential that made you, or was it just curiosity and you eventually just started doing more research? Like, how did that process play out?
Yeah, I always knew I wanted to scale and do bigger projects and keep growing. And I knew the way to build true wealth within real estate is to get into commercial real estate. Now, I'm not saying you can't build true wealth within commercial or within residential real estate, right? But like, to me, I didn't want to be a landlord managing 100 rental units and they're each cash flowing like a couple $100 a month. Like, I look at things a lot in terms of, you want something that's scalable, but it's stress too, right? Like that's not what I wanted to do. It wasn't appealing to me whatsoever. So, commercial, what is appealing is that residential and commercial are valued two different ways, right? So residential properties, I think we've talked about this before, but it's like I have I'm still in a duplex. I have a small portfolio of residential properties, but it doesn't matter how profitable each property is. The value of that building is still going to be the same as the most recent building that sold next to it. So if there's a duplex next door that sold for $400,000, then mine's going to be worth about $400,000, assuming that they're comparable, maybe a little bit of adjustments, right? But like, even if mine cash flows $5,000 a month and his cash flows $1,000 a month, it doesn't matter. The value to a bank, the value of the building's the same. And so I wanted a way to control my equity more. And so with commercial real estate, right, it's like, well, look, if you can control the profitability, right? Like if you can run a tight ship, run a successful business, and have a profitable business, then you can build equity. So there's different shifts. It's like you have the shift on the revenue management side of things, and managing that revenue, really optimizing it, and then the expense side of things, right? Running it efficiently, but a lot of expenses, they pay off in terms of revenue, and so I'm a big proponent of paying those expenses to make your life easier and really be able to focus on growing revenue. But if you find a project, it doesn't matter what it is in commercial real estate, right? But if you can grow the profitability or the net operating income, then you can really increase value of commercial assets. So it's just a game of scale, right? So like if it's a small office strip mall or something, or a strip mall or small office building, and it's a few $100,000. Well, that's a great way to start, but you're only going to be able to add so much equity, and the bigger you go, the more equity you can build, right? Like 10% increase on rent makes a much bigger impact on a $40 million apartment complex than it does on a $400,000 strip mall. So for me, self-storage spoke to me. It's like easy operations, easy revenue management, month-to-month contracts, simple business models, not complicated, right? And coming from residential real estate is like, well, this is much, much easier to manage and to handle. So that was kind of my thought process.
Yeah. And as you mentioned, like there's more control in the value of your asset at that point, right?
Yeah, for sure.
It's kind of a double-edged sword, right? Like it's both on you. Well, so if you own your residential real estate, you're kind of more beholden to the market around you, like market forces. Whereas like if you're operating a really highly profitable business and you're making intelligent cuts and you're optimizing costs, then you have a lot more impact on the actual returns you can get. But
well, I think it's important
that too, though, right? Like if
yeah.
it's on you and there's more accountability. So something as far as when I think about real estate investing, commercial or larger multifamily has always been a little bit intimidating feeling to me because so I wonder like what made you, because you kind of just lined it up as if it was like an easy decision, but like was there ever a point where you were going from residential to commercial where that felt intimidating but you like made the leap, and then how did you get over that hump? Because I think that can be quite intimidating going from a small number of units to a large number of units, or trying to raise capital for like just a few residential properties to like a large multifamily type property like an apartment complex or even a strip mall can be in the multi-million to acquire. So like
For sure.
was that ever a challenge for you, and like how did you get over that?
Yeah, I think I guess one thing to say is you still are affected by market conditions within commercial real estate, right? Like I don't have control of interest rates, and so therefore I don't have control of cap rates, right? Because if you're getting traditional financing and your interest rate's at 6%, well, you don't want to buy a property at a 5% cap rate, right? That's like negative cash flow. Now, if there's some massive value add there and a way to do it, some people take on that risk in that project, but ideally you want a spread there where your cap rate is going like stabilized is going to be right like a lot higher than your interest rate. So that does affect the value of my assets and of the commercial assets, and something you can't control. As far as the transition, right? So like when I transitioned over to commercial real estate, like it was super intimidating, right? But I closed on 2 self-storage facilities in one day. They were 2 separate sellers. They're 2 separate partnerships, right? And one was with you and our buddy Jordan Kapper as well. And we bought that together, and I closed on another one with a couple family members. It's super intimidating, right? You go to these things and you're looking at it and it's like, okay, like how am I going to manage this from being hours away? And you're looking at this giant like building, and it's not just like, okay, you have one customer, you have hundreds of customers and tenants, and you have to put the systems in place. But honestly, I think it's the best way of doing it. It's just jumping right in, right? Like the advantage to self-storage is there's so much technology that can help you manage the facility. If you set it up correctly, it's a pain in the butt to get it all going, right? It's a pain in the butt to get all the tenants over to the right storage software. And so it's all like rentals are done online, payments are done online, all that stuff, right? To get the security cameras in there, to get the gate running and operating, and so it's automated. And then the biggest thing really is like the boots on the ground, like getting that set up. A lot of people want to be cheap and pay their boots on the ground $10 an hour. Well, you're going to get $10 an hour at work. So it's really finding reliable people. But that's no different than like residential real estate, right? You still need your handyman. You still need somebody who's going to go, help you with the leak or go paint after a turnover, that sort of thing. So it's finding that handyman. And luckily for us, right, like we found a pretty good one who we inherited from the previous owner, and it's worked out well. Now, I think the downside is he's not tech savvy, and so he doesn't have, he doesn't email, he doesn't. Like his phone must be so old he doesn't even group text, right? He'll only like send text to one person at a time. If you text them in a group, he'll send it back just to you, that sort of thing. So that's a bit of a pain. But the upside is he cares about the place, like he takes care of it like it's his own. We pay him well. He's a good person. He's getting work that he wants to do. He's happy to do, and so that makes it easier. And so it's kind of a trade-off. It's like, okay, well, yeah, he's not as proficient with technology as you'd hoped he'd be. He's not getting in the software and like checking reports himself to see who moved out and what units to clean. But he cares, and so that's a big, a big factor that outweighs the other ones to us. And so we've stuck with him, and that's made things a lot easier. So it's all about leverage.
Yeah. In that case, it's largely like about leveraging capital, right? More so than like labor, and also you're leveraging software, right? As far as like online management. So there's a couple levers that you're pulling actually. But a question on like part of that risk that we were talking about in moving to something like self-storage is what you just outlined, which is like the operations risk, especially if you're doing if you're operating them remotely.
Right.
So in the deals that you've done, we did kind of get lucky as far as finding our boots on the ground guy with that facility. But how have you approached finding trustworthy, reliable operators for remote facilities in other deals? Do you have a process for finding those people, or do you have any do you typically go with? Have you used any property management companies to deal with that, or do you think those cut into the margins too much? Like, how do you approach that?
Yeah, that's the go-to, is finding a local for me at least, right? Finding a local property management company who maybe they handle Airbnbs or just like a portfolio of rental properties, and hiring them, not to manage like the tenants or the software or the revenue, but simply to do maintenance, like unit turnovers, like lawn care, fixing the gate if it needs it, the security cameras if they need updating, that sort of thing. But it's all about quality, right? It's like you're paying for, a lot of it comes down to stress. It's like, okay, how much stress is this person going to take off my plate for an extra 10, 15, 20 bucks an hour? And so I'm happy to pay somebody 35, 40 bucks an hour, that's going to give me good quality work than to pay somebody 20 bucks an hour who I cannot trust and is just stressing me out all the time. So at my other facilities, right, I've had a lot of luck with the local property management companies. Some are good, some are bad, but you can vet them out, and it's all about clarity, all right? It's like you give them the clear instructions on what to do regularly, and make it a pretty black and white thing, and either they do it or they don't do it, and it makes their job easier. It's not so much giving them decision making power. It's like, look, every week, here are the units that are turned over and you got to clean out, take pictures, send them to us, that sort of thing. Mow the lawn every week, snow plow, every snow plow more than an inch, right? It's that sort of stuff. So yeah, and the other thing is, a lot of times those property management companies, they have teams. So you're no longer relying on one person who, if he gets sick or if he's out of town, if he's on vacation, nothing's getting done. They have teams. They have 4 or 5 maintenance people. So I'd rather pay hourly, a higher rate, and have a team that is willing to help with that maintenance stuff.
Yeah, there's not that could be a point of failure if you rely on one guy, right? And and Bob the builder is on vacation and you need something done, right? You have some diversification in your labor there, which is useful.
So I want to say, I think we both have different areas of expertise, right? And so we're coming together, working on a self-storage facility together. We don't, every facility, every property, I partner with different people on. And so this one, there's 3 of us in the partnership, and we're taking this on together. But, it allows, I think, for you, right, you enter the self-storage world and the real estate world, while you maintain focus on what you do best, what you're an expert at, right, in the tech world. And so I guess just talk a little bit about how that balance has been and what your thoughts are in real estate, and are you getting the bug at all? Do you want to transition over, get out of tech, and just move full time into real estate? Just tell me more about your feelings and your experience with the self-storage so far.
Yeah, so the great thing about the partnership that we set up is, one, it's nice to be a general partner because it actually you get involved in the actual deal. You actually get to see how these things are put together. You get to interact with the bank and see, what that process is like, whether that's like trying to get financing through SBA. You get some experience with that process. And if you're partnered with people who have done it before, or at least one person who has some experience in that, you can kind of learn on the fly, but also there's a little bit of support in your team if things aren't, if you don't know how to do something. And with this example in particular, it was great to kind of follow along and, participate, but also get some exposure to how it worked without being like a complete novice. And then, once the deal making phase is over, you actually get some exposure into, the different software that's used in these things. Like you get familiar with the terminology you need to learn. We'll go over the financials quite a bit, so you get to see how that's structured, as opposed to like sitting down and trying to study all this stuff from scratch or watching a bunch of YouTube videos ahead of time to decide if you want to do it. Like this has really allowed me to learn on the fly and with like a real world application, as opposed to, just like, I don't know, learning everything through some tutorial or whatever. So it's been super useful in that regard, in that like you kind of like, it's baptism by fire, right? You get, and without there being too much, you're not like on your own there. So there are people you can rely on. There are people who know what they're doing. You trust the people that you're in business with, and it allows you to get some exposure to a different way of making money, I guess, from what you're used to. And in this particular case, it's been great because I haven't had to do it alone, which is really nice. And when you have a team like this, it allows there to be a little bit more of a distribution of focus, even though, I mean, for the most part, you are doing most of the actual financials and accounting and stuff, which is really useful. But having people you can rely on in that sort of transition phase is really useful. Like, I think similar to when I transitioned out of like working for other companies to doing my own thing in the tech sector, it's also like, I think it'd be too big of a risk for me to just drop everything and jump into that blindly and completely as a beginner. So for me, it's been great to have, I guess that middle ground where, I have people I can trust, people I can rely on, and that takes some of the risk and I guess fear out of the process. And then you start to, once you are a little bit more comfortable with how the business works and what the KPIs are for, what you're looking for in a good business, then you can actually start looking at deals yourself a little bit more. You can actually start doing some modeling yourself now, once you have an example of what somebody else is doing. And so for me, that I have started to slowly over the last year or so get more and more interested in the space, because it doesn't feel as intimidating as it used to feel, because you're slowly exposed to these different concepts and ideas and how these things work. And it takes a lot of that like mystique, I guess, away from it. Basically, it's not as complicated as people would assume. And I guess it just takes some of that intimidation away. And that's definitely been super useful. And as you mentioned, though, it still allows me to, it's a space that still allows me to focus on other things full time. Like I'm not running a portfolio of these things like you are. So coming in as a partner on a few deals has allowed me to still focus on my main thing, but then also slowly get more exposure into it, which has been really, really beneficial.
Yeah. So you've been on the limited partnership side, right, in deals, and you've been in real estate deals, and you've been on the general partnership side. What are your thoughts on the differences between the two? Do you like one more than the other? What is like, what are you going to focus on going forward? And I guess really, what do you recommend to other people, right, who are in similar positions to you? They have great jobs, they're making good money, but they want to get the benefits of real estate and enter that space.
Yeah. I think if I wasn't, if I didn't benefit from having people to pull me into a deal as a general partner before, like I think a great approach would be getting involved as an LP with some of these syndications, right? Because through that you get to see, how this information is, like the information of a deal, how it's presented to you, how it's structured, from the team that's doing the syndication, and you get to see what factors they're looking at because they're pitching you on the deal, right? Like here's the area that it's in, here's the demand, here's the financing that we're using, how much we're raising versus how much we're putting in. You get to see like how these things are structured without having to, be liable for these things yourself. So it allows you to put in, like if you want to, the minimum that the syndication is requiring, and that gives you some access into how these deals work and how these businesses are operated. And then if you want to, if that piques your curiosity or you're getting more passionate about that, then you can partner with other people in different communities. And there's like a number of ways we could talk about how to get connected to different people. And we could talk about, I guess, how you've connected with other people in this space too. But if you are more interested in this, then maybe you do just pick up your first deal to see, how, and maybe you could start with something smaller and see, get a better idea of actually how much work goes into running these things yourself, how much goes into raising the financing yourself, because you get a pretty good idea from that, even from doing one deal as a general partner. So, I mean, my recommendation for people who would be coming from like a similar, I guess, story to mine would be being an LP in a syndication seems like a good first step, right? And then, and then making connections over time with people that are also interested in that space, in that realm of investing, and then maybe trying to find smaller deals to operate. So, I mean, as you can tell, I sort of take this approach with a lot of things, which is like incremental, iterative steps into spaces. I don't like taking these large, risky leaps. I like to kind of build on knowledge that I've learned, like slowly, and then meet people, and then try to operate on a smaller scale first before trying to take on bigger and bigger things. So, I mean, that would be something I would suggest for somebody else who is trying to get involved that isn't an expert in the space. Like, I think like being an LP is an exceptional way to learn with like pretty limited downside.
So what are the next steps for you? Like, where do you see yourself going forward? Are you going to do, like, we're going to the facility we have, right, that we're both general partners on. We plan to expand that facility and or buy more self-storage locally, right, to put together like a more of a portfolio in that area, something that we can build, add value to, and then eventually sell and reinvest, right? So outside of that, though, like where do you see yourself going in real estate?
Yeah, so the interesting thing there is, we have this deal that with the Farwell property, which is the one that we're working on together. I think it's going to be super interesting to see how this expansion goes, because it's going to give you some real tangible, practical insight into how well does projected demand fit into like actually growing these facilities. And also an interesting thing about the timing of the economy is like I think the biggest question people ask when they get into, well, really any type of real estate, but especially with self-storage, is like, how recession-proof is this? And this is kind of, I mean, nobody wants to go through a recession, but it's going to be interesting to see how this property does as far as like vacancies or downward pressure on rental rates. So I think the reason I bring that up is because I think going through this process, we've had this facility running for almost a year now. And so personally, I've got to see like tangible results in how well this thing performs relative to how it was modeled early on, which is like pretty close to how it was modeled. These things are relatively predictable. So that's something I take from this, is like, you can model these out relatively predictably. You can't always predict the economic circumstances that you're going to go into, but even if it does take a downward turn, you still have a pretty recession-proof revenue stream. So I think over the last year, it's given me more and more courage seeing how this, or confidence, I guess I should say, in this type of investment, just seeing how it's performing in these like risky environments and over time. So I bring that up because as is the theme with other things I've mentioned, I'm not super risk. I don't have a super high risk tolerance. So like, the longer these projects go on, and I think when we do this expansion and we see the vacancies kind of go down with the new space, like that'll give me more and more confidence to maybe try to do try to get more involved as a general partner on some other deals. But the only reason I haven't within the last, I guess, year, and this is probably, it is an excuse, but I don't have an explicit goal to, I guess, acquire more properties right now. But really, I've just been, as you mentioned, focusing on building up a new business after. So basically, we sold our last one. So for the last 6 months, we've been building up a new business from scratch and bootstrapping that. So that's pretty much been my focus. And as you mentioned, like, it's been a priority for me to sort of not have to focus on my real estate stuff full time, and that's been a big benefit of it. And so yeah, I'm very much somebody who's like singularly focused when I do work on things. So if I have to be heavily involved in like raising funds or deal searching myself, and it's just on me, then it's probably not going to get done. I at least for the time being, my focus is still in tech and in building these game companies that I'm have more expertise in. Until my focus shifts away from that, I probably won't be running out there myself. But as I gain more confidence in these things, I think it's a lot more likely.
Yeah, and I think you brought up risk tolerance, right, a couple times, and I would say, correct me if I'm wrong, but I'd say like I don't know if it's like I have a higher risk tolerance, but I would say I have more comfort with pushing the boundaries, right, in terms of like revenue growth and like rate increases, right? And maybe that's because I have prior experience in real estate, right? And this is what I'm focused on. And so to me, I don't look at it as risk though, right? It's like it comes down to data and to numbers. And there's something to be said for when your facility is 100% full, and there's demand, there's constant demand, right? It's like if that's the case, you haven't found the true market rents, like the true market rates. So the goal is to optimize the value of your property and the revenue. And again, it's better to be like 70% full, making $15,000 a month, than it is to be 100% full, making $10,000 a month, right? Like it's not so much about occupancy; it's about the revenue that you're actually collecting. So I guess what have been your thoughts on like the rate increases and how we've pushed the market so far? And I guess I'll just lead with we are the market leaders at this point, right? And we have pushed multiple times, and I think it's been something that's like we've gone back and forth on. Are we going to do this? And I've always wanted to, and we are still, relatively like effectively, 100% occupied. There's always like units turning over, but we're in the mid 90s constantly. So yeah, what are your thoughts on how that has gone, and just going into it, how you originally felt?
Yeah, first of all, like it's been super interesting because intuitively, or I guess not intuitively, but like the first impression, and I think maybe a lot of other operators fall into this trap, which is like they are also afraid of losing, like their priority is occupancy, because for them that's like a measure of risk, right? Like if you see like the biggest risk factor is like, oh, I have this facility and there's nobody renting it, right? Like I need people to rent it, and as long as I'm cash flow positive and I have high occupancy, then I feel safe and secure. It could be, especially when we first started raising rents, I was very concerned. I was like, well, what happens if we raise rents and then we lose 20% occupancy because we push it too aggressively, and now these people these are tenants who churned and they're not going to come back. Like once you churn through tenants, what's the likelihood that they'll come back? We don't know. So I was pretty skeptical, not skeptical, but I was like just a little bit, I guess, intimidated by the prospect of doing that and potentially losing. Because when you're cash flowing and things are going well and it's following the model, it's like, well, why rock the boat, right? Like why push the rates if we're making good money, and like why? But working with somebody more experienced like you, it definitely has opened my eyes a bit more to like, you don't want 100% occupancy. Like you mentioned, you're not really optimizing the property if you're at 100% occupancy. That means you have room to push things, and in a way, you kind of want to push out. It's not necessarily a bad thing when you have tenants who leave because of rental increases, because it opens up occupancy for higher value tenants, right? So that's something that you kind of opened my eyes up to, and with discussions with Jordan. So I'm a little bit more, I guess I have a little more perspective on that now. But I think one thing, and we can talk about this a little bit.
Well, how's it gone? What are your thoughts on how it's gone? Right, because we've
Yeah.
increased rents like what, twice now. I
Yeah.
mean, in a matter of, I think, like within 6-7 months, we did
Yep.
2 rate increases, and I ideally would have just done one, but I
Yeah.
felt like we just really didn't
Yeah.
push the first one far enough.
Uh-huh.
And then once that was shown, we did another one right before the end of summer, because once you start getting into the colder months, the demand isn't. People aren't moving as much typically.
Yeah,
But-
that's hard. So this is interesting because, well, for one, it's gone well. Like we haven't dipped really too low below our target occupancy rate, and we've been able to like hit our target like rents per square foot. So that's gone well. But this kind of goes hand in hand with something else on the other side of these businesses, which is your SEO, right? Because really, if you can raise rents like theoretically as high as you want, proportional to the demand that you can create for your facility, right? So in a way, the better your SEO is, the better your reviews on Google, the higher your listing on Google searches for your area, you're creating more demand, right? So
Right.
that allows you to to push the rents up a little bit higher because more people are landing on your page, more people who are willing to pay a little bit higher are finding your page, and they'll actually lease up. So that kind of goes hand in hand, and maybe we can talk about that a little bit more later. But that's something else that I learned that, it's maybe not the first thing you think about, but on the topic of raising rents, like that has also been something that I've learned firsthand, is that like if you can do a lot to create demand for your facility. You don't just have to sit there and like wait for people to come find you, right? You can go out there and you can make yourself more visible to people, and by proxy, you can make yourself indirectly, you can make yourself a lot, you can increase the demand for your facility. So that's been cool to see because it takes away some of that fear. Like, okay, cool, I can actually do things in my control to create demand. Like I'm not subject to like pure market demands. Like I can actually push that a little bit more. And especially if you're going into a market where there's already facilities, that gives you a little more confidence too, because you can see those other facilities, and sure, maybe they have a high square footage facility, and maybe that pushes down the ratio of demand for actual square footage in the area. But if they're not doing a good job on their SEO, then that gives you more confidence to go in and attack, right? You're like, okay, I can actually take over this market even if there are other competition there. So that's been cool to see. It's been cool to see in action that we can raise the rents, that we can keep the occupancy stable, and that we can increase demand ourselves. So those things all kind of go hand in hand, which has been a good lessons.
And I think the trouble comes in when you start competing in big markets against the REITs, right? It's like we're not going to outperform public storage in SEO. It's just not going to happen.
Yeah.
And public storage can take a hit all day long. They're not playing the same game that we are playing, right? So like the risks that they can take, and they can just basically price you out of the market.
Sure.
If they want to make their rates 25% less than ours, they can do that, right? They don't typically do that. Typically, they're like the market leaders. But my point is that in some of the more secondary, tertiary markets, that you are competing with mom and pop owners, and if you have these skill sets and you know how to properly run the business, and you know how to optimize SEO and attract customers, then you have a huge advantage.
Yeah.
Cool.
Yeah, you're definitely ahead of the curve on most of these, as you mentioned, secondary and tertiary markets. Some of these smaller facilities that are in the same area, like they're just not up. These aren't mom and pop shops which have been owning these things for sometimes decades, and they've never updated their page, or they're not doing SEO at all, or they don't even have online leases. Like these things are really like ripe for the harvesting as far as like going in and competing in these markets. That's a good. I'm glad you brought that up, because that's also another lesson that is not intuitive for a first-time investor coming into the space. Is like, if you go and look at a facility and you're doing an analysis on a deal, like when I first started seeing some of these deals, I was like, why are we looking at these crummy, not necessarily crummy, but like, these are not first-class facilities in huge markets. Like, so intuitively at first you're like, I don't want to invest in this, right? Like nobody lives here. There's like 10,000 people in town, and this is like a 12,000 square foot facility, and there's already a couple of other like smaller facilities nearby. Like, how are we going to win in this market, right? But like you start to slowly see that it's just easier to actually use the influence of your skills in those markets, as opposed to like competing in the more competitive markets where the margins are going to be a lot tighter, basically, and you have a lot less control on the actual cash flow that you can produce.
Yeah, it all comes down to quality, man. I mean, one of my core values at my company, Maven Equities, right, is abundance, and by that I mean it's like that a lot of it comes down to quality, right? It's like paying the people to take care of your property, paying that extra, $10, $5, $10, $20 to get a good property management. It's paying to have a secure facility and the automated gate, paying to have the right software, basically paying for quality, and in return, you are going to be more profitable. It's reinvesting into that business as opposed to more of a scarcity mindset, which is, like, well, here I can cut costs. Well, this guy's cheaper.
Yeah.
But, like, I don't want to increase the value of my facility at all. So all we're doing is creating a quality experience for customers that attracts quality customers and allows us to build a quality business.
Yeah, that's been really encouraging to see firsthand too. That those differences across the board, they do make a real impact on how much more willing tenants are to come to your facility over other facilities. Whether that's like the quality that they get when they call in to your call centers, to how quickly maintenance issues get fixed, across the board, those things make a big difference.
So I guess let's transition. I have just some questions that I'd like to go through, and I'll kind of I'm looking at these, and some of them we just we've talked about and touched on throughout the episode. But here's a good one. If you're going back to 18 years old, right? Like, what would you do anything differently? Like, how would you fast track success? Any advice you would give to yourself?
The biggest thing that comes to mind for sure when I was younger, and we did sort of allude to this a bit, but the biggest lesson I learned, I guess, over the last 10 years in just working on side projects or side hustles, which ultimately led to real companies that were built from them, is this. So there's a book by Seth Godin. It's called The Dip, and it outlines the nature of how these projects, how they kind of unfold. And what I didn't know when I was young was anytime you start a new project and you get together with friends or partners and you get super excited about this idea, and there's this is the novelty phase, right? Everybody's very excited about it. It's new. Everybody wants to hit the ground running and work on it. And there's no issues yet. Nothing's like stopped. There's no friction yet in the projects. And when I was younger and I first started doing this, I hadn't gone through this enough to really learn how to deal with this, like basically how to deliver on projects, how to finish things over time. And so I would hop around anytime that we would hit this like dip in the project where motivation started to get low, people stopped showing up to meetings, there started to be bugs in the project, or there was a competitor who launched something similar. Like, there's always something. And when I was younger, I was less resilient to these things. And we would always, whether I was working on it individually or in a team, invariably these projects would always kind of just phase out, or just people would quit on the team, or we would just jump to something else that was more fun seeming, because you're chasing the novelty, you're chasing the high of starting something new. And I was very subject to that early on in my career when I was building these things. And then over time, through just repeated attempts, just hitting my head against the wall, failing on project after project, you start to get a little bit more endurance. You start to see a little bit more of how your psyche works and how the team psyche works over time. And eventually, there was a bit of a breakthrough, and we can talk a little bit more about that later, but really things clicked for me the first time we really made a real commitment as a team to follow through on a project, no matter how long it took. Because the key to that was it allowed us to see the whole, to zoom out on the trends of how projects go in any space, really. It allowed us to zoom out and see okay, this is how it works. It's not linear. It's not always up and to the right on all metrics. Things go poorly. Motivation like people have varying degrees of motivation through these projects. So the first time we were able to do that and made that commitment to actually finish something, whether it succeeded, to take less of our focus on the actual outcome of what we were working on, and to actually prioritize the process more so than the outcome, and literally just, putting an emphasis on showing up every day and making some amount of progress every day, no matter how long it took. When we took that focus off of just, when are we going to be done? How good is this going to be at the end? When we took our focus off that and just focused on, actually showing up and getting through that, no matter how much we didn't want to work on something, like that's when things really started to click for us. And when we finished a project after that, I think, at least in my mind and other people's minds that I worked with, I think that's what really was the turning point for us. And that was ultimately kind of like what led to subsequent projects being super successful at the company we made, which is like we became very experienced in just shipping stuff and building projects from start to finish. We became very familiar with that feeling of boredom and dread and lack of motivation, and you almost welcome it. You're like, oh, here it is. Here's the dip. We're here again. We know this is coming, and it allows you to kind of endure that a little bit more. And that was such a big shift in performance for us, like being able to just actually follow through on the things we wanted to build. So if I was going to go back to my 18-year-old self, it's tough though, because like you can't just tell somebody that. Maybe if you
right.
Maybe if you give your testimony in this way to a younger person, maybe that is motivation for them to try to actually stick through these projects. Maybe it will give them the wisdom and perspective to follow through on projects. But really, I kind of just had to experience it. I really had to experience like the failure of not finishing projects time after time after time, and being disappointed in myself and my team over and over and over again, before you really get so sick of it that you're just like, you know what, I don't care. We're finishing this. I don't care if it takes us 5 years. We're getting, well, ideally you don't want it to happen. But basically that's, trying to shift your perspective away from the outcome. So if I was to go back to my 18-year-old self, that's what I would really try to explain to him. And I think that would have taken years off of how much time it took us to actually start shipping things that impacted people, that people wanted to actually use. So trying to explain that to my younger self would probably be my first approach. I don't know how well it would work though.
That's funny. Yeah. I love that. I love that so much. You hear it again and again. It comes down to perseverance and sticking with things. And that's essentially what you did. You don't know what your potential is or what your team's potential is unless you have the grit, the persistence, the perseverance to stick through the projects and to see them through to the finish line.
Yeah.
The honeymoon phase is easy for everybody, right? Like, and no matter what you do, it's just easy. You're excited and things go, but it's that boring part. It's the boring. It's the hard work. That's where the money is made. Yeah. So, I mean, I'm a big proponent of. I believe if you do the right things in life and you make good choices and you really persevere and put in the work, life will happen exactly as it should. So it's not like, to your point, right? It's not like, okay, you go back and you would have just fast-tracked and skipped all this and just gone to success. Like, no, you probably needed to experience those failures and those other projects that didn't work out and just experience life. It's happened just the way it should have happened.
I agree.
So.
Yeah, I think that applies to like pretty much every area of life, right? Whether that's real estate investing and showing up and building a process for finding deals, or setting habits to, like, if you're trying to like work with a bank for financing, like not letting those emails sit there for an indefinite period of time, like consistently making progress on communication to get the deals closed, like whatever habits, whether that's in real estate or whether or not you're working on software projects. And you just need people to show up on days, when they don't care about showing up and actually making progress. Like that applies, or even if, like the most cliche version is your fitness, right? Like it's like 9 out of 10 days, you're not really going to want to go to the gym, or you're not going to want to go on that run if you're training for a marathon. It's about showing up and like doing the work when you don't want to, more importantly than anything else. So it is, the more things you get involved with, the more success you see in different areas, the more you see that trend and that pattern that kind of runs through like the thread of everything in your life. So it's really cool to see that same thing, in different industries.
Awesome. Any other thoughts on, mindset and just mindset when it comes to success, not success? To me, mindset is is everything. It's key. So it has been a underlying thread in what we're talking about here, but just didn't know if you had any more comments on that.
Yeah, I think something that's kind of interesting in that realm, for me at least, was a lot of times, and we sort of touched on this a little bit earlier, but a lot of times people won't know what steps to take, as far as like making progress on something, or even what they want to work on, or what interests they should take. And for me, something I've found that's useful, and I don't know if it's directly mindset, but I guess it sort of applies, is modeling these things as experiments, where like if there's, for example, a couple of different options, you can time box these two different options, right? And you can commit to actually giving full effort into one set of circumstances for a certain period of time, and then doing analysis on the results. And if you time box them, then you know that there's a finite amount of time. You don't have to like say, I'm going to commit to this thing forever, or this is definitely the direction I'm going to go. You try it for a little while, and then if it's not working, then you can switch to something else but only after you've committed to actually putting the effort in. So a tangible example of this was like when we were trying to make this leap of like building a successful project, sticking and actually releasing something of value. Like the only time I was able to get past that was like, I've used this kind of mental model in a few different areas, but this is one example. Was like there was a project which we weren't really sure how long it was going to take, and we weren't really sure if it was going to be successful. And so both of those things can a lot of times lead you to not even start, because you're so filled with doubt about how it will turn out that you're just sitting there discussing in meetings all the time whether or not it's worth pursuing. And so once we modeled this as an experiment and said, you know what, let's just spend 4 weeks building a prototype. And it doesn't have to be software, right? This could be anything. Let's spend we don't know which direction to go. We don't know exactly what to build, but we have some ideas. Let's build a prototype on one idea that we have. And let's commit to doing this prototype for 4 weeks, right? Like, so it's time boxed, it's finite, it's a tangible experiment to run. And for me, it took like, you can sort of like I think that book Mindset by like Carol Dweck is one thing, and I did read that book, and for me I needed to live it though. So like putting it as an experiment made it more clear to me that like it's about like once you actually start taking action towards something, then everything else starts to kind of fall into place. Like, have you ever heard that expression that action produces information? So
I have not heard that phrase before.
Yeah,
but okay.
It's super true. And so that's kind of one thing. It's sort of like related to mindset, but if modeling things as experiments is a way to get you moving, to stop analyzing and just start to do things, then that could be super helpful for you too. I don't know if it is, but for me it was to like time box something, to try something out, just to get yourself moving towards a goal. Because once you start to move, you start to gain information. You start to learn about market forces.
Absolutely.
You start to learn about tools that you can use. You start to get excited about things. You start to do more research on your competitors as you're moving. And you start to, all this like energy starts to come into the project just because you're moving towards something. And so I think that's something that you could kind of take away from mindset is like, just start, define what you want to work on, time box it, and then just the action itself will sort of steer your direction, as opposed to like sitting around thinking on whether or not what you're doing is the right choice, right? So
yeah, I love that. It's just simply taking down those walls, those barriers of fear of failure, and just giving it a shot and taking action.
It's exactly.
It goes so far, and that is very much related to mindset. You don't go anywhere if you're always just feared or afraid of failure. It just nothing's going to happen. So that's how you progress in life and you learn. And if you fail, great. Like that's you learn, but at least you tried, right? And if you keep persevering, you will be successful. So I love that. I think that's a great take on mindset. Any book recommendations and any tech recommendations? You mentioned the book The Dip by what is it, Seth Godin? Seth
Godin's a pretty big personality on the internet these days, and for a while actually. So that one's a good one, and it's short. The dip is really short, so you can get through it pretty quickly. And then another book that is, I don't know how well known it is, but there is the CEO of AngelList, his name is Naval Ravikant. His Twitter handle is just @Naval, and he's a super popular, I guess, thought leader. He's sort of like a techno-philosopher at this point, but he has a series of, he had a really popular Twitter thread called "How to Get Rich Without Getting Lucky." Actually, he's pinned it on his profile, so that's super information dense. I think that's one of the most incredible like Twitter threads that you'll find, and it's super popular. So at the top of his Twitter thread @Naval, you can you'll see it pinned, "How to Get Rich Without Getting Lucky." And so the reason I bring him up is because there's another guy, I think his name is Eric Jorgensen. He compiled all of Naval's, not all of them, but the best excerpts from Naval's blog posts and Twitter posts and YouTube videos and interviews and podcasts. And he compiled these into a book called The Almanac of Naval Ravikant. I think it was called. The Almanac of Naval Ravikant. This is one of my
That's awesome.
one of my favorite books over the last like 3 or 4 years, and it's also pretty short. It's got 2 sections in it. It's one is about wealth, one's about happiness. And even though I sort of just bought it and I wanted to go through the first half, which was just about wealth, like the section on happiness was actually super insightful as well. So I think he's just a super interesting thinker, and he's kind of shaped a lot of how I think about, I guess, how to design your life at this point. So I would recommend that book, and just following him in general, because he's got a lot of interesting perspectives on life, and obviously he's super successful in his own right. So it's not just some random person speaking into the wind.
Fantastic. I appreciate that. This is something that you definitely have my interest, and I definitely want to read up on now. Being in the real estate world and being so focused on what I'm doing, it's just great getting recommendations outside of this space, because you start to hear the same books and the same things over and over again. So this is a fresh perspective. And any tech recommendations?
What do you mean by a tech recommendation?
Just lifestyle, anything like fun, any apps, anything that you've been using lately that's just, as a positive benefit to your life.
Let's see. I guess in the domain of, this is pretty random, but in the domain of financial portfolio management, there is a portfolio tracker called Kubera, which it's pretty new still, and it's still a work in progress, but I think that's a really good wealth tracker, and that's been really great for me as far as like managing my assets across like my various portfolios across like real estate, my index funds that I'm in, 401ks that I'm managing, crypto, you name it. Like,
how do you spell that?
Kubera. So Kapper is pretty cool. It was really easy for me. You can really customize how your dashboard looks pretty easily. So at a glance, you log in and you can see everything that you want to see like pretty quickly. So I like Kubera. It's cool for wealth tracking. Another cool thing that might be applicable to a lot of people is, have you heard of Notion, like the note taking app?
Okay.
Notion.so is the main thing. So that's like, I think a pretty big improvement on a lot of other note taking apps. Like I think it has it's a more modern take on like Evernote, and it's also a little bit more collaborative. So I think Notion's cool.
Awesome.
Too. So those 2 things are worth checking out, I think.
Cool. That's great. Is there any way that the audience listeners can support you?
No, I'm just kidding. Actually, no, not really. I'm fine. Thanks, guys.
Yeah.
I'm not raising any capital right now. I'm not hiring. I'm not looking for really any.
I know. I'm waiting for you to kind of open up your world within gaming and tech, and so I can learn from you and get in on that. And
yeah, I mean, we're bootstrapping a new company right now, which we've been working on for probably 6 months. So I mean, we haven't. This is not really the phase. We're sort of in stealth mode right now. We don't really need to raise capital at this point, but I think there is definitely a real possibility that when we start to scale this thing up, that we'll be we'll be starting to raise around our initial like seed round. So that'll be cool to try to get some people in on, but we're not quite there yet.
How can the audience reach out to you if they have any questions? What's a good way to connect?
So I'm usually pretty inaccessible except when my buddies ask me to do podcasts. No, so I do have a Twitter. I'm not on there all the time, but if you want to DM me or anything, one of my Twitter handles that I use sometimes is at FableRBX, FableRBX. So you can send me DMs there or something. That's fine.
Okay.
I might check it, but maybe not. Well, who knows? So that's probably that's the most direct way to contact me, probably.
Awesome. Okay. We'll add that in the notes. All right, Matt. It's been great. Thank you for being a great guest on the podcast here, and hopefully we'll have you on again soon.
Yeah.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.